Hello, viewers. Welcome to my channel. Today, I'm going to be teaching you guys some patterns, candlestick patterns that we really need, or rather, you'll be needing to be able to navigate the forex market. All these candlesticks patterns, um, the formations are everywhere and it's something that repeats on a daily basis. Day in, day out, those patterns reoccur, you know, and the ability for you to identify all those candlestick patterns that will give you an edge. Those things you must not take them for granted because if you don't know the anatomy of candlesticks, that means you are not a good or professional trader. All those things you must learn first before you become successful as a forex trader. Now, these two patterns first that I want to first of all give up because you see them everywhere. They are called the morning star candlestick pattern and the evening star. They appear everywhere. Now, the morning star, there are usually three candles. Both are always three candles. The morning star appears at the bottom. At the bottom, when I mean bottom, I mean at the end of a downtrend. What do I mean by that? This is a downtrend. When I mean a downtrend, when price action is coming down like this, right? How do you know that this trend is is losing momentum? It is when you see a formation, candlestick formation. Now, the candlestick formation now here, if I ask you, this is what we call morning star. This very one here, this three candlestick here, this three can 1, 2, 3. This is what morning star candlestick formation. If you look everywhere, it occurs everywhere. I tell you guys, it occurs everywhere. This thing you see occurs everywhere. So you must be able to get yourself acquainted to this. And where are you supposed to check before you really see the actual formation? You scale to the higher time frame, not lower time frame. Like I taught us in top-down analysis, when you want to do your top-down analysis, you go scale up to the higher time frame first, the weekly, no matter the type of trader you are. Please scale up. There you will now see the direction of the price action. When you scale up, you'll be able to see the structure perfectly. You know the direction of trend. Now I'm on the weekly time frame. This here is what we call the morning star. This very one here is what we call the morning star. And what does morning star represent? It's telling you that the downtrend has lost momentum, then bullish trend is about to continue. The buyers are tired, the sellers are tired, beg your pardon, the buyers are taking over. That is a very simple analogy. The sellers They don't have strength anymore. Now the buyers, they are the one in charge. They are about to take over. They will not see this formation. This is a downtrend. It gets here. This is an indecision candle. We call it doji candle. It's an indecision candle. Then the next candlestick is the confirmation of the reversal, which is the bullish candle. So that is it. Now, the other one is what we call the evening star, and it's opposite, Where does that one appears? At the end of a bullish trend. This is a bullish trend. Let me just quickly show us. This is a bullish trend. Now it has come to this level. For this trend now to change to be bearish, it has to give you a formation. There is no magic there. It has to give you a sign. The sign is the candlestick formation. So you must know how to read candles, to know the anatomy of candle. Very, very important. So now the bullish trend, you see, exhaustion. So you now know that the trend is about to change. If you are on this trade, I tell you, by the time you see this guy, exhaustion, you see another exhaustion, you should take your profit. Take your profit and uh, um, wait for another opportunity. That is how. Don't be greedy. That is how it should be. Take your profit and wait for another opportunity. That is it. You know. And now the evening star will now appear at the end of the bullish trend. So this is a bullish candle. It got a resistance here. That means it cannot break through this place. It got a resistance. Then the next one here too, it moved upward. Then he got a rejection. He found a resistance too. He got a rejection. He pushed down again. Then the buyers still push it back up. Then it closed in the middle. That is indecision candle. What is it telling us? This, we see a candlestick formation. It's telling us a story. At this point here now, we now discover that the the sellers, they are pushing down, the buyers, they are pushing up. At the end of the day, the bullish and bearish engulfing candles appears because he opens, he wanted to push up, but sellers rejected it again. Then they took control. So, guys, it's very simple. Let me just quickly do a recap. We have the morning star. The morning star formation usually happens at the bottom or a support level. A support level. We have a support level, we have a resistance level. Support level is usually the downside, just like the floor. The floor can be anywhere where there is a support. Anywhere that there is a support level, morning star formation will usually form there to now give you a hint that price has found a support there at that level and the trend is changing to be bullish. Now, another one is the evening star. The evening star forms at a resistant level. What is a resistant level? A level where price cannot break above. Once price gets to that place, it will find a resistance. There will be a rejection. A rejection in the sense that sellers will be pushing the price downward because it's going higher, and they are now saying they don't want price to go above that level. So that level is what we call resistant level. So evening star formation happens at a resistance level, and there are usually three candlesticks, like the morning star, three candlesticks, like the evening star, three candlesticks. Now, the evening star will form at the resistant level. Now, bullish trend, a trend, excuse me, a trend that is going up to get to a point where it will find a resistance, then price will reject one candle, the middle candle, then the other candle that will confirm the reversal. I hope I've made myself very clear. It's very simple. Morning star usually form at the support level. Evening star usually form at the resistant level. Resistant level, remember, can be anywhere. Anywhere, it can be any level where price cannot break above. At that point, there are sellers there who are pushing the price downward. Then the support level is usually at a level where price cannot break below. Why? Because buyers are there. As the price is getting to that point, they will reject it and push it back up. It's a level. It's a level of support, and the other one is a level of resistance. So for you to now say that a trend is about to change and is about to reverse downward to be bearish, there will be an evening star formation. For a trend to reverse upward to become bullish, a trend that is bearish, for it to reverse to become bullish, there will be a morning star candlestick formation at the downside. Look at it here. Look at it here. Now look at this very one here now. If I ask you, you will know because I just thought of this is what we call evening star formation. It's very clear. Very, very clear. It's a clear formation. Now, where is this price going to? The price is coming down to break this level. That is the idea, is coming to break this level. How did we know? At this point, there was a change in a trend. There was a change trend. Look at a high that breaks this low. Then this high, this one failed to create a low. If I ask you now, this one here break the structure, it broke the structure. This one failed to take out this high. This is a weak high. This weak high now came down, it failed to break this low. And what does that tell us? That this high must go. Now the price rally up, it took this high, but if you look at it, it did not take this high because this is a strong high. We classify it as a strong high. If you watch my previous video, you will understand. Now, this is evening formation telling us that there's a reversal of trend now. Now, this reversal of trend, where is it going? It should come, take this low. Come and take this low. Where is the where is the inner structure of this overall structure? The inner structure is this. This is the inner structure. So this guy here should break this inner structure. At this point, this is a support level. Price will get here, will react a little, but at the end of the day, it will pass. It will break below this place. But look at it. Let me put this price range. From here now to this place, for example, how much? 225 pips. If you bring it down to this place, to this point, how many? 291 pips. If you can identify this kind of formation, this kind of formation, and you are able to catch this groove only once in a week, you are okay. And it now depends on your account, and your risk appetite. Where you are making $1,000, there are some people that are making 10,000. There are some people that are making $100,000. Yes, it depends on your risk appetite. And apart from your risk appetite, it depends on the ability for you to identify a setups like this. When this kind of setup happens on the higher time frame, I'm not talking about lower time frame. Lower time frame, there are too many noise. So all those setups you see, mostly they are fake setup because of the noise that is associated with the lower time frame. Am I saying you should not trade on lower time frame? No. Scale up, do your analysis on the higher time frame. Once you have identified your the setup, your strategy, then you now scale down to the lower time frame, maybe 15 minutes, 1 hour. Then you now, execute your trade. That is how it is, guys. So thank you so, so, so very much. And I want you guys to share this video because that is the only thing you can do to support me. I'm not charging anything for this training. I'm just this information rather. I'm just giving it out for free, right? So you guys should work on learning structure. Work on being able to identify structure. We have the major structure, we have the minor structure. The overall structure is a higher time frame. We have the inner structure, which are the smaller time frame, the minor structure. From here to this place now, like this, all these ones you see, they are internal structure. Then we have the main structure. The main structure. The main structure is the overall structure. Like the minor structure facilitates the major structure. The minor structure will first of all happen before the major structure move will happen. And most experienced traders, what they do, they wait for the minor structure to align with the major structure before they execute their trade. Because the higher time frame is just like, okay, just like for example, in a week we have just one candle. What happens? There will be a put. Okay, in the case of a downtrend, there will be a push down. When it's making a retracement, it's the same candle. It will go. It will push back. And if you scale down to your lower time frame, that retracement will be bullish. That retracement will be bullish on the lower time frame. Then you just hop in and start, oh, this is bullish, but you will get to find the resistance. Then you now see that price will turn. And you think that maybe you don't know what you are doing. No. But the only mistake is that you fail to follow the major structure. You have to follow the higher time frame. That is what will guide you. So guys, share this video, like, and I see you again. God bless you.